What's up, guys? This video is going to be a market update for Friday, May 7th, 2020. So, sorry, I've been busy. I just haven't had time to post. So I'm going to give you guys a little bit of insight. So a lot of you guys have been actually DMing me saying like, hey man, like market is getting kind of high, or what do you think is going to go on with real estate, with everything, right? So I'm going to try to break down just my perspective on things, and try to break it down to layman's terms. So let's start off with, I think a credit contraction could come and why that would be bad for us. So obviously, you know that we pumped out a lot of money into stimulus over the last like month and a half, right? And we have a lot of government programs out there, and we've even seen the Fed, do buy back mortgage-backed securities, from the open market. And all this is a crunch to really provide liquidity. And what does that mean? Just provide cash, right? So when you're in a state where you have like a business and your business is running, low on funds to be able to operate, you need to have that cash to be able to sustain and stay alive. Now we can get into why I think the PPP might be a horrible mistake for a small business to take, especially if you have to pay it back. But that'll be, we could talk about that at a later time. We're trying to talk more to you as just a single investor, right? So the credit contraction. So you see, the first steps I kind of started seeing this was a couple of months ago when you seen that some of the big four banks, especially Chase, came out and said, hey, we're looking for only 20% down if you're trying to buy a new home right now. We're not going to help with any kind of programs or take any kind of programs for like 5% or whatever. So you kind of see the reason why they're doing that is starting to brace themselves for a possible recession and a slowdown. And moreover than that, article that came out last week, it proved that the point of the article was that there's $14 trillion in credit card debt in America. That's a lot. So, for you as a consumer, if you have a credit card that had a limit of like, 10, 20, 30, 40, 50, whatever it is, it could possibly be cut in half because credit card companies are going to want less exposure. Is that the end of the world? No. I mean, do some businesses rely on credit or credit card payments to make, like the cycle? Yeah, it's probably not the best idea, but people do it. But overall, on the broad spectrum, you can kind of see these financial institutions are starting to take a little bit of hesitancy about the future outlook and trying to position themselves in a way that when things do go bad, or if they go bad, that they're in a position to be able to sustain. And to be honest, you look at the balance sheet of the big four, especially someone like, I invested in Wells Fargo this week. It was, I still am investing. I believe it's super cheap right now. But you look at like, because you want to look at the balance sheet to see, hey, how much cash do they have? How much liability do they have? What's the kind of hit they could take? They are they are way better positioned today than they were in like 2008 for the financial crisis that happened. And, the thing about it right now is no one could project a global pandemic. That's just not the way. I mean, you can't really factor that in. So the scaredness of people and what I've been advising a lot of people that have just been messaging me, they're like, oh, what do I do? This and that. It's just like, hey, you invest if the numbers are right? So I would say that you would want to do, obviously, I'm looking at my notes here, like always from the long term, you're going to be fine. I believe in America, 100%, still one of the greatest places to freaking invest. As of right now, we still have maintained our property rights, pretty dang well, and we continue to grow as a nation. We have largest consumers here, so long term, the prospects of America seem fine. But the thing is, you want to start positioning yourself. So let's take an example. If you did think like, oh, wow, airlines are really cheap or cruise lines are really cheap, you do your homework, you read everything. Let's say you had about $10,000 to invest. You shouldn't just go all in on 10,000. That's very financially, irresponsible. You got to budget in. And remember, in the video I talked about positioning, you probably would allocate maybe $1,000, and see how that goes, and then wait. And so they're like, everyone's like, what's the time frame? Especially in real estate. Like I'm working on a deal right now. I mean, hopefully it goes through. We'll see. I'm not really worried about it because if the numbers make sense right now, then you got to do the deal because who knows what's going to happen tomorrow. You can't base it off of that. You never do a deal, right? So I think that, as you see the country open up in waves, we're going to have problems, of course. Like nothing's ever going to go smooth. And if anything, this is a great test run for our country to say, okay, this might not have been as serious as we thought, but now we know we definitely need to allocate some resources, have some protocols in place, maybe have some federal guidelines at the state level that but when a real pandemic happens, what are we going to do, right? But we have to get people working again because, you're going to, either way, you're going to be killing people, like It's an ethical thing. It's a moral thing. We could do a different video about that. But basically, when the country does start opening up in waves, the reason why you see a lot of these companies not skyrocketing up, such as airlines and stuff, is they're wondering how much is this going to affect bookings? How much is this going to affect business? Are people going to instantly go and start bar hopping and drinking, or are we going to ease back in as a society too? And we don't have a magic ball. We can't see that. That's why I said it's best for you to position yourself in. And so, like, if you wanted to really buy cruise lines, you say, wow, their earning potential at its peak at one time was amazing, but you don't know how many people are going to book. That's why you want to ease in. And overall, I think we'll get a way clearer picture in August. And why do I say that? Well, like, I brought that up towards the end because right now, like the earnings reports that came out this quarter, this last week here, this added January and February, and March is when it got boom, head down, like just locked down, right? And in April, for the whole month, mostly the businesses that have been locked down or operating at a not 100% capacity. So then once we start opening back up, we'll see the actual levels of the country. We'll be able to see a trend. We'll be able to see a whole month of June and a whole month of July, and be able to see, what percent are coming back, how much those changes were in the month, and then we'll be able to get guidance for the future. So August would be a real telling time. Now, real estate. I've heard a lot of rumblings. I've contacted a lot of like property managers in the local areas and said, hey, what's going on? Because everyone, let me take a step back. Every billionaire article that I read or video that I watch, they're saying, well, things are going to get tough. Things are going to get tough. And it's like, who's in the best position to take advantage of that? It's the billionaires. So of course they want to create this narrative. They want to push this idea of like, oh, everything's going to be a fire sale. So they're going to be able to come in and buy things cheaper. But that's not the reality. And the real estate market, unlike the market, the real estate market, unlike the stock market, is completely different. Because you don't have someone knocking like they do in the stock market every single day saying, hey, will you sell your shirt for this price? No. How about this price? No. How about that price? Real estate, once you buy it, you kind of forget it. And it's very fundamental because you're basing it off of the rents collected and then assumed, appreciation. So from our local area here, I can tell you right now, the people that want to buy are still looking to buy. People that want to sell are still looking to sell. You're not seeing a huge steep decline because things don't really move that rapidly. Now, I will say one thing. I do think commercial real estate is going to be impacted pretty dramatically. And I think the world has changed forever. I talked about that in the coronavirus video a couple of months back when I said why the world will never be the same. And it's true that some of these companies are starting to realize, hey, we don't really need this much office space. We don't really need to spend millions of dollars renting this place when half of our employees could work, the other half could go here, and we could rotate or do whatever. And I think that will change the real estate or the commercial real estate aspect of things in the short term dramatically. But just like anything else in the world, guys, things evolve, right? Like if anything, like just because that retail space is not being used for that purpose right now, who knows? Later, that same retail space could be used for something else. Because the one thing that we haven't got to yet is us as humans, as you know this, me and you are watching this right now, probably stuck at home. You want that human interaction with people, man. It's good to be able to go to a bar and just hang out and have a beer and joke. So also mentally for yourself, can you imagine just if you were working from home? It sounds great. Be able to wake up, work out whenever you want, but then you're just confined to your own home. Like that's not human nature. We're a pretty sociable creatures. So in the long term, again, I think those commercial real estate industries are going to be used for something. And we'll have to see what that is. But in the short term, they could plummet. Now, what I mean by plummet, I'm not saying it's going to go like 50% off. Because a lot of people are still locked in for leases. It's not going to make sense for someone to break it. So it's going to be like a curve. Like you're going to see, real estate, commercial real estate was on the way up or the appreciation was up. And then when you see, those declines in those leases, it might dip. And on that dip, someone might come up with another idea like, oh, this space could be used for X, Y, Z for society or whatever. And then it'll come back up. So I do see opportunity there. And the next thing I see opportunity in is if you got a lot of cash and you're into multi units, like, 15, 20 plus, especially here in California, I'm hearing the pain from some of my friends that own these bigger units. They're like, man, yeah, 10, 15 people aren't paying, like on a 40 complex property, aren't paying the rent because you can't even enforce evictions until June 15th right here in California, right? So if I'm staying there, I was going to be evicted. Or if I got really impacted, I'm like, screw it, I'm not going to pay anything. So you have to roll the paperwork in June. then I could get to go to court and roll everything into July, and you can't really get me on until August. Now, all that time between one space to the other, a lot of people are kind of going to be screwed. Now, like in real estate, you should always have a little bit of cash on side or another business that keeps you afloat. But a lot of these landlords, they're small businesses, man. They're not like a faceless corporation. They're regular people, and they could get burned in the short term. Like no one's going to pay them back. There's no bailout for small landlords. So some people could fold. Some people could say, you know what, this is not for me, or this doesn't make sense for me, or because we're emotional creatures, man. You have something bad happen and you don't have someone to talk you or steer you in the right direction, you could just say, screw it, I want to get rid of it. But at the same time, there's freaking vultures out there, man. There's guys out there that got cash, they're ready to make deals. Like they need to make deals. Their whole business model is on deals. So if they see a 10-15% decrease in a property, they're not going to be like, oh, I'm going to let it bleed and go down. No, they're calculated, they're cold, like you should be in real estate. You look at the numbers, hey, if it makes sense, it's a 12 cap or you're making this much, they're going to pounce on it, and I don't think you're going to see a '08 type of crisis. And the reason why a '08 crisis was different from this crisis is because '08 hit one sector and the government did act quickly, but it still took time. There still was a gap. Here, pandemic hit. I mean, I applaud the government and both sides, left and right. Right away, we got money to people. We got money to, and we could debate on which was the right way to go, of course, but we were able to step in right away to save it. Now, some of the billionaires' arguments is long-term, including real estate and all that, is we're going to have to raise taxes to get that money back, and that could slow the economy down. That is to be seen. Those are things that it's really, really hard to price in when you're trying to invest. You can only go really off of the facts that you have now and the predictions you're making for the future. And you got to ask yourself, what do you think is most likely? And that's what you're going to be basing it off of, right? But in the short term, to wrap this video up in a sense, what I see is there could be a credit contraction. But at the same time, if the Federal Reserve is pushing on these financial institutions that, hey, lend, you'll see that kind of get sidetracked and you'll see lending again. If the short term, there could be deals that come up in real estate, but long term, the prices are going to be pretty stable unless you bought at ridiculous, prices. And the same thing for stocks. Short term, you could go in for some hurt and some pain as things get reestablished, as we start getting a clearer, better picture. But if you really, really want to buy something and hold it for the long term, you're not just day trading, start building a position and look at it like once a week. If you got like 10 grand, I mean, there's no harm in buying, like a cruise line that you really wanted to put in on. Buy $250, starting Monday. Just see what it kind of does, and then wait like 2 weeks and buy another $250. And as you get closer to August, maybe you're only $2,000 in, but then prices get dropped in half. Then you're like, all right, I'm gonna put in $2,000 here. I'm gonna allocate more. It's all about capital allocation, guys. Your job as an investor is you have this much. You have a fat stack of money, right? Your sole job as an investor is to say, where am I going to put this money that's going to give me the best return on this capital? It's that plain and simple. If you have $1, how quickly can I make this dollar back? And then the only other variable on that is, what's the risk I am taking? Because that return is not going to be guaranteed, right? So those are like the three foundation principles that you're thinking. Like, I got this dollar, I want to make the most money I can back from this dollar, hopefully the whole dollar back. But then you factor that in with, how much risk am I taking? Can I end up losing the whole dollar to make the dollar back? Okay, well, what if I invest in this? I only have a 5% chance of losing this dollar, but I only make, 5 cents back on it. So you got to evaluate that at your own pace. But right now, if I had cash, if you got a great deal, I mean, I've always said it's all about the numbers, do the deal. But if you're hesitant, and you should be, you should always use caution. I wouldn't go blow my whole, load per se, on just one deal. I would try to allocate very smartly and make sure you have enough stacked that if things do go south, you can hold on to what you got. You don't want to use, rule number 1 is never lose money, right? Rule number 2 is don't forget rule number 1, Buffett, so that's where I'm kind of at right now. So these are the things that I'm seeing, but, we're going to have to see how they play out. And from there, we'll be able to decide after August, we'll get a clearer picture. We'll be able to decide how we could allocate our capital that's best.